Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 21st of April. All right, now, if you haven't seen it yet, you're just going to be very surprised to see oil hit negative $40. Now, this is the May futures price, which was rolling off Tuesday, today, I believe. And looks like everyone was waiting for it to bounce, thought it was a bit of a price glitch, and no one wanted to take delivery. So the damn thing sort of absolutely collapses. And it's bounced back from sort of minus 40 to now being back in the positive. I think it's up close to $2 again. So just understand this is an impact. I was going to say a cyclical impact, but it's not. It's just an impact of the coronavirus. No one's the oil demand has just gone through the floor, and we're now left with some weird price action. But outside of the movement on the oil price, the rest of the oil futures are pretty much steady. They're still lower, as in overall, in the $20 sort of level, but nothing like the extreme levels that we were seeing today. Now, just coming back to changing screens over here. Coming back to the sort of risk on, risk off profile, right? So you're looking at equity markets gave back their gains from Friday. We're coming into start of Tuesday trading in Asia. Equities down 2.4%. Now, that's not really being replicated straight away in the Asian equity markets. If anything, the correction back in oil just now has probably sort of taken the pressure off the whole problem issues. Gold sitting around, it's down smalls at 0.16%, and the Asian yen crosses aren't really doing a lot at all. If you're looking for a bit of a cross-market sort of analysis, okay, you've got obviously the crude price down here, down 160% on the year. Okay, that's year to date. That's taking into today's move. So oil obviously getting the raw end of it, whereas you're looking at the light crude, and then you've got US 10 years. Some of these major instruments getting absolutely pounded. Commodities down 36%. You're looking at the Dow. It's a pretty good result, only down minus 17%. Then you got looking at say coming back to a currency like the euro, it's only down 3%, and gold that's up 11.6%. This could really help you isolate your what instruments are going to move around what specific news. Right? Looks like gold's got a lot built in, plenty of room to come back down. Obviously, the equity markets, plenty of room to come back, but still plenty of room to move as well. It's an interesting one. And you can also set that up on your currencies and see what's happening there. I had that set up on the daily basis, but you can change that time frame around as well if you've got metastock. Now, so what are we looking for today? Now, if I look at the general markets, right, active pairs, well, the most active pair is oil. Now, that situation is over, but the whole trading opportunity is not, right? So if there's a storage issue, as in the US storage facility will apparently be full in 2 weeks, that's going to stop oil going anywhere really significantly. Now, the resistance for oil is still back towards $18 or $19. I would be still looking to sell rallies, because if this lockdown continues, there's only one way for oil to go, and that's all the other futures pricing to go back down towards maybe $10, $10 or $15, somewhere around there. That's probably fair value for oil if the lockdown continues. Outside of that, we have a lot of things building up. Okay, there's a lot of potential in the market. What we are missing is the momentum driver, right? So to me, there's a whole range of opportunities here. I've got a different sort of range of preferences, from selling rallies, obviously waiting on some pairs, and selling breaks on others. So what you really need to do is, if you come back to, let me just come back to my major charts. Okay, you're looking for the opportunities here to be getting into the pairs. Now, there's some Aussie data out today, the RBA minutes and the governor speaking. It looks like to me it wants to go down. I'm not exactly confident with that just at the moment, because there's no immediate, uniform move on the dollar. And what I'm talking about there is, if I just quickly flick you back over to this screen, I'm talking about this sort of area here. I would like the bottom four pairs to be moving in unison, and the top four to be doing the same. It's a bit up and down across the board, right? So I know these things have just been reset after the 5 p.m. New York, after the roll, but I'm not seeing very clarity in the market with the US dollar, and that makes things a little bit trickier. I think the Aussie is one pair that will be lower. Okay, its economic conditions and set up before this whole geopolitical event were already terrible, so that's probably where it is. The rest of the pairs, euro, Kiwi, well, even sterling now drifting sideways, dollar CAD as well. Now that the oil price is back down here, you've got to think oil's got to come back down. Okay, that's got to be a bit of a no-brainer. Back to where it was yesterday, around 140.40, and dollar yen, it's asleep, waiting for the next big event. So really, there's not a hell of a lot to get excited about, right? So when you come back into looking for the major trading opportunities, you're looking for momentum, right? Where's momentum going to come from? Well, today you're looking at there's two Aussie releases over the course of the day. We've got the minutes, which I think we're just out about 4 minutes ago, and then you've got the Governor Lowe speaking. You got some sentiment numbers out of Europe. Check those out, and employment numbers out of the UK. I don't know if these fundamentals will impact. My experienced guess is they won't, but you have to wait and see. Just look for where, what we really need is the US dollar, okay, to really give us some direction. If you look at the dollar index, there's a good chance of this thing to pop up here through 100 again, and that could be the catalyst, but we need fresh news. If there's no fresh news, then what we might get is a little top up, take out a few stops, and then just trading sideways again. And that's not cool, right? So we're looking for, generally speaking, we're looking for the equity markets to give us some sort of direction. At the moment, they were down. Slight bit of dollar buying on that safe haven principle, but that's about it. So we really need more news, more information to stick our teeth into the currencies. And what you're seeing is, if you have a look across the board here on the news, there's less panic about the pandemic. It's more about what's happening, what's going to happen, and how we're going to turn this thing around, as in what's going to happen at the back end. Okay. And you'll probably find as you look around the globe, everyone will have some sort of opinion on the oil move. To me, it's an anomaly. It's over. Look forward to the next opportunities, right? Dollar CAD should go down with that move as the oil price corrects, the futures prices. All right, that's pretty much it for me, guys. There's not, there's only a certain amount of things that you can say about what's going on, and that's pretty much it. Market conditions are pretty good. The pairs are trading, technically quite well. What we are missing is the momentum, right? And that's the key part. So that's the gravy of the whole thing. So just keep an eye on your charts. Wait for the market to tell you when to trade and what to trade, as opposed to just jumping in willy-nilly, having a guess. All right, that's my two bobs worth. We'll catch you later on. Cheerio.